Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where this show we get you in the next 30 minutes all details about the company, why we are getting them, and also the management as well. Of course, we will be talking to this company which is Pearl Global. It's of course a textile player, but the question remains is why are we actually calling this company in our segment? Textile industry has been in focus, especially of the US tariffs, the exports which we will talk about. There is an overhang and the commentary has been coming from the industry players, and even the industry is trying to help this sector. So this is the most important talk. Is the overhang of US tariff agreement with India going to be over? And if that happens, will we see the depressed sentiments for the textile industry go up? The second question, of course, will be that what's the relevance on company's global business model? Is it surviving the stress which is coming in from the tariffs? And if yes, how it is doing it and how it is different from its peers? And that's my third question as well. What is the moat? Others are also bleeding. They are also bleeding, but lesser. Why? Is there a moat to it? Is there a kind of a support coming in the back end? Also, client concentration risk. They are having some revenue concentrations to the bigger clients. Is that a risk? Or actually it's a favor? Why? Because of the customer stickiness. Also, lastly, the further expansion of capex plans which the company might be having going ahead once the clarity comes in for the US tariffs. Also, let's look at about the company, why it's important. We discussed the questions with you, but about the company. This was founded in 1987 by Deepak Kumar Shah. That's where the history starts. And the key focus areas being sustainability, quality and innovation. Apart from this, Gurugram is where their headquarters are. It's an NCR-based company. And let's look at the core business of Pearl Global, what it actually is. It's into apparel manufacturing and supply chain. Also, it's a partner for global fashion brands as well. That's where the high margins also kick in if you compare them with its peers. 25 units, 93 million pieces capacity. And there's a tech advantage also where they include new things. That's 3D design tools and QR tracking, but most of the industry players are also doing it. It's not very much new also. FY25 revenue, that is good numbers, 31% up. Look at the numbers. They are walking the talk when it comes to delivering the number 4506 odd crore rupees. But you must be wondering what's the product breakup looking like. This is a roughly, you could say 72% is from knits and 28% is coming from the woven fabric segment. Also, the other products, lesser contribution, design services with 75 global designers, and when you have services, that means your margins are on the heavier side. Activewear, sleepwear, denim and children's wear. Upcoming areas where you see imports, the exports going very high, and OECO Tex certified. These are the sustainability numbers, not that important, but the revenue model, that's the most important. And there's a concern also, 99% of that is exports. And that's the major overhang which the industry wants to ask us, this company is that over, or if it is fighting it, how it is fighting it. Also, the overall numbers, if you look at the revenue, that's coming 73% rest of the world, 27% India. So that one question we'll be asking the management is, will you have an hedge when it comes to the exposure in the domestic markets? So enough about the company and why we actually want to get the company. But before we start the parameters, I'll just explain you what are the important parameters which are important when we judge a company in KYC. So we have 8 rating parameters. To start with, income statement, balance sheet, cash flow. This is the holy grail of financial statements. This is the first and the most important thing when you should judge a company in fundamental basis. Then comes return ratio. Have the stakeholders actually made money or not? Shareholding, street cred, that's also important. And valuation, comparing it with its historical averages and also nearest peers. And lastly, but the most important, the future looking statements, the outlook. That's where the stock market gives you your value. So these are the important rating parameters where we'll judge the company. So let's move on. First one is income statement. And net, we see there's a very strong growth coming in. Look at the numbers, FY24-25 and the 3-year CAGR. Top line 18 odd %, but the magic is happening in the EBITDA segment. That's 42% CAGR coming in. Margins, net are stable, and net profit, that's a significant jump coming in. But you must be wondering, these are the FY25 number. What's the most recent number? And that is the Q2 numbers. Q2 numbers did have some impact on the tariff impositions, but it was not that bad as what the street had feared, and that is why I liked the company's performance in Q2 as well. Our revenue was 9% up, not much, but EBITDA and net profit, that is where the cost efficiency programs might have kicked in for the company. And during trying times, when a company achieves operational efficiency, that is where the margins start going up, going ahead. So that is something which I really liked, and that's why that reason we see a 120 basis points up move coming in, and margin trajectory is going towards that aspirational 9.5 to 10% mark. And for a player like this, or an industry thing, this is industrial higher average margins coming in. So net, I will be giving a thumbs up to the income statement aspect for this company. Up next, balance sheet. Balance sheet, the numbers, they are stable. Not much changes happening, but you should be looking at the borrowing numbers. There's a significant spike coming in. Company is looking at expansions as well, but those expansion plans are, of course, subject to what happens globally, because you remember 73% revenue comes globally. So that's a very big moving factor when it comes to this export play in the textile space. Cash and bank balance, that has significantly gone up from 366 crore. This amount is at 566 crore rupees. So it's a wait and watch. It's not that shareholders might be getting rewarded for non-expansion policies, but if the company expands, if the capacity comes back, if the global demand comes back, then the company will have a good cash reserve to deploy as well. So that is a very good strategy coming in from the company, but the debt levels are a concern to me a bit as well, and that happens. So there is a push and a pull, so I'll give a neutral rating for the balance sheet. Cash flow, that's also very much important. Net, we see there are divergent trends happening here as well. The cash flow to PAT, that has come down significantly, and that at times hurts the liquidity ratio of a company, and you can see that on the screen as well. Net cash flow, however, on the other side, that has gone up almost 174 odd crore rupees. It's just not the operating part, but there are other ways also where the cash flows go up from investing and financing, and that is why you're seeing a very high number. So divergent trends coming, so I'll still give it neutral because it hasn't passed that cash flow test. And of course, this won't be able to do also company because of the current geopolitical scenarios. That's why company is doing their liquidity management works as well. A return ratio we'll focus on now after giving a neutral rating to cash flow. The return ratios, looking at these numbers, they're pretty healthy when it comes to the FY25. Generally, when you have a barometer of 15% plus ROC, ROE, that is where the magic happens. And let's just pick up both ROC and ROE. That has been a significant value creation for the long-term shareholders as well for Pearl Global. Avoid the short-term aberration. This has been a good multi-bagger as well. So from the return ratio perspective, for both capital employed and ROC, I will be giving a thumbs up to the company. 4 parameters are done. We are halfway through our ratings. Fifth one is the shareholding pattern. Shareholding pattern largely has been stable. Promoters have been stable at roughly 63% coming in, but FIs, slight selling coming if you compare that with March numbers to the September numbers, and the DIs, they have lapped up. So any sale which has happened in the market, DI lapping has been very strong, be it from the public counter or even the FI counter. Look at that number from 11.6%. A value buy increase is coming in at almost 14% stake by September quarter. For shareholding pattern, I will be giving this a neutral rating. Up next is street cred. Street cred is nothing but the way the stock has moved from the long-term perspective and short-term perspective. 1 month, it's up 27 odd percent. Maybe the market is digesting in that the India and US trade agreement is near the counter, and the 6-month share price and year-to-date has been decent. 1 year, it's 40%. So the medium-term shareholders have actually benefited from this company, and this is despite the volatility coming in the global markets. 5-year share performance has been a big multi-bagger for the investors, 110%. This looks like a birth date if you look at that 5-year share performance, but it's very interesting. But net, this has kept all sets of shareholders happy. So I'll give this company a neutral rating for this as well. But let's move on to valuations. Is it very expensive yet, or a minor correction has made it attractive? That's the question you will be wondering. And also, they have a peer that's called Gokuldas Exports. Just look at the valuations. it looks like it's on the cheaper side. FY27 is just 22 times the price to earnings. Industry ratio is roughly around, you could say 30, 28 to 35. And currently Gokuldas Exports, look at that, that's their peer. That is almost double when it comes to the valuation. So it's certainly looking cheap when it comes to the valuations front. So I will be giving this company in this rating a thumbs up. So we have done 7 KYC ratings and our last rating, but it's very much important and it's very forward looking. That's why I say outlook is the most important thing going ahead. Over here, we see there is a diversification happening in manufacturing and sales. So that slowly company is trying to reduce their US dependency going ahead. And value add mix, that we need to understand the company also, that which are these products which will give you higher margins going ahead. Also the question is Australia, Japan, UK, EU and Spain. These are the categories which generally becomes a hedge against the US markets. So that will be something which we'll be watching out for as well. And H2 growth numbers, generally they are always on an upward trend. That means there's a lumpiness there for these textile export players, and generally it is on the positive side. And lastly, FY26 margins slightly better despite India tariffs. That means company is doing something. Despite so much negativity around their export play, they are able to maintain their margins. That means there must be some kind of an internal process setup or some cost efficiency moves happening, and that's why the margins are actually going up. And maybe it can touch that 9.5 to 10% marks, and that's one of the key questions we'll be asking to the management. But before we go to the management, I have compiled the entire KYC ratings for you so that it becomes very easy for you to understand how we have gone through the show. Let's pull up the KYC ratings chart for you. Income statement has been good. Q2 numbers on the good side despite what we saw, the tailwinds coming in from the US-India trade tariff issues. Balance sheet cash flows, nothing much to share right now because the company is holding up the cash flows for deployment. And lastly, we can say the shareholding street cred has been neutral. Valuation still attractive because of the cheapness compared to Gokuldas Exports. And lastly, outlook also, we say you could say it's a kind of a positive to neutral impact coming in. But net, despite the company being in a tailwind sector right now, it's expected that this will go up going ahead, and I've given this company 5.5 out of it. That's on the higher side of the ranges and the averages we generally give in our show in Know Your Company. But now we know a little bit about the company, whatever we could get. Let's get a little bit more about the company, and for that joining us is Pallab Banerjee. He's the MD at Pearl Global. A very good afternoon to you, Pallab. We can see the entire industry itself is waiting, not just from the government, that they'll be getting some kind of incentives because of US-India trade issues, but the burning question is, how do you first survive? Because you have a history of thriving. So how will you be surviving this sector, issues which are coming in, and later on what happens next? Good afternoon, Pallab.
Yeah, good afternoon, good morning. In fact, I think, yes, US tariff is a concern at this point of time for the India market. But overall, as a company, we have about 27% exposure in India, as you just mentioned in your charts. So the rest of the markets that we are manufacturing and exporting from, there we're not seeing any disadvantage. In fact, we are seeing some advantages.
To make this into more, kind of a more information for our viewers, because most of the viewers who have messaged me, they have stated that, Sharad, the entire discussion is overhang coming in the tariff issues. So company must have made some safeguards during this time. You are trying to reduce your dependency in US as well. Can you give us, in a brief setup, that how have you been doing that? I'm sure last 4 to 6 months there has been a change in strategy. So what is that?
So you see, this journey not started in 4 months back, but it's been continuing for some time. In 2021-22, we found that our US exposure is very high, almost about 86% plus. And that's the time we started developing the other markets as well. And today, when we look at the data, it's our US exposure is less than 50% as a group. And that doesn't mean that US has shrunk. In fact, our business in US has grown from $180 million in 2021 to almost about $300 million, as the running rate for this year. Whereas the other markets have also come in, which is used to be about $15 million. Now it has gone up to almost close to about $300 million. So that's the kind of change that we have been undergoing since 2021-22. And yes, this particular year is a completely roller coaster because, first of all, US implemented this whole tariff across all the countries of the globe. So that means the US customers, the brands and the retailers, they have to shell out more tariff as the goods goes into US. So that has got some kind of repercussion in the US market. And especially after August, when we got to know that India has got almost about 50% tariff, additional tariff from what used to happen during the MFN duties that we used to pay. So that's resulting in some kind of change in strategy. India, if all of us are hopeful that this tariff situation will resolve very quickly, and if it doesn't resolve, then we have to have a backup plan. So this is something that we are undergoing at this point of time. In India also, the exposure to the US market was close to about 60% till last year. This year we are seeing a significant drop in that. And the other markets like Japan, Australia, Canada, European Union, UK. So all these markets are taking a major share in India as well.
And Pallab, the word which you have used is the backup plan, and everybody needs to have that in life, be it stock markets, but your industry has been taking the brunt a lot. Could you just give us some strategic views, not number necessarily, but what's the backup plan looking like? The dependency angle is also there, but is there anything else to it as well?
So first of all, like if you see the industry, we are in garment industry. So we manufacture garments and fashion for all the major retailers across the globe. Yes, US has been a large market. They import almost about $80 billion plus of garments from across the globe. But there are other markets like European Union does about 90 plus billion dollars. And then of course Japan, UK, Australia, Canada, these are also good markets. And Asia region, like for example China, India, they are also growing significantly. As human beings, all of us wear clothes. And whatever is the scenario, like this is a consumption that doesn't go down. In fact, if you look at it, even US market is growing at the rate of almost about 4 to 5% annually. I'm talking about the apparel or the garment sector. Now, keeping this in mind, how you built up the business. And mind you, one more thing, this India has not been playing a very major role in the garment or the apparel sector. If you talk about globally, the largest players have been China, which exports almost about $180 billion of garments few years back. It has come down a little bit because of all the geopolitics that is going on at this point of time. Followed by, and the top gainers from China reduction has happened in Bangladesh and Vietnam. Those are the two countries have significantly grown in the last 5 to 7 years. Followed by Indonesia, Germany, some European countries which makes a lot of manufacturing, and India comes in the rank of almost about 7 in terms of garment exports number if you're looking at. So if you talk of Pearl Global now, Pearl Global also we have a global strategy. We are present in some of these major garment manufacturing and exporting markets. We have a big setup in Bangladesh. We have a reasonably big setup
Yeah.
in Vietnam, Indonesia. Now,
Yes,
those are countries.
Pallab, one more question is there on this margin front. Value-added product is something which the company is adding in their product line as well.
Yes.
What are these products, and on a blended basis, what we can expect for the margins? It's currently at 9% on the higher side, and it's still maintaining despite the issues in the trade tariff segment. So what are you doing, first of all, that these margins are going up? Is it some internal efficiency measure, or is it the value-added product?
Absolutely. See, as China continues to lose the market share, and the countries which are also gaining are like, Indonesia, Vietnam. Those are places where the high value product we have been focusing upon. And, one more fact that I must tell you is that if you talk of the global consumption, there's a huge amount of almost 70%, 75% plus comes from the man-made fibers, where India has been lacking, but these other countries like China had the biggest share, and now also Vietnam and Indonesia are gaining. So that's where we are seeing a huge advantage that is Pearl is getting as we're getting those high value items in the synthetics like the high altitude outerwear jackets or the fashion jackets in terms of down jackets or polyfill jackets. So those are things, a big number that we produce and for better quality of brands. Like if you have the market pyramid, the top end like Polo Ralph Lauren, Tommy Hilfigers, and of course there are Walmarts and the Targets of the world. So if you go up the ladder and if you are servicing those customers who are paying higher value, that's something like we do quite a lot out of our Indonesia, Vietnam kind of facilities. So that's where you're seeing this change that our value is definitely the margins. Our goal has been to be in the range of 10 to 12%. We are almost there. We are just crossing that 9 to 10% mark at this point of time. If you take out the effect of the tariff that we paid in the quarter two, some kind of discounts and some sharing that we had to do with the US clients, and a couple of our new projects which are just taking off. So there have been some, initial losses that comes in. So if you take out those, then we are almost touching 10 or going beyond 10.
And
Our
Pallab,
goal is to go to
yes.
12.
And Pallab, there's an important thing. We spoke with some of the industry peers of yours also, and they stated that your company's business model is a bit different, and there's some kind of a moat to it. Now, it's very technical at times. So if you could just give us a kind of a simplified version for our viewers, what's your exactly moat, when it compares to your Indian peers here?
So compared to the Indian players, we are, as I say, like 5 different countries of manufacturing. We have almost 7 different categories of product, including right from synthetics, the outerwear jackets, activewear, athleisure, sleepwear, then of course the denim wear. So children's wear. So like those are the kind of various categories of products that we do to the customer, and we have a huge design offices across US, UK, Spain, where we are almost negotiating and designing together with the clients. And also the diversified market, I would say, is another strength of Pearl Global. Almost, as I told you, 50% of the business, or just below 50% of the business is coming from US market. The Spain and Japan has gone up to almost 34-35%. So like that, this diversification is also very important, followed by the UK, Australia, Canada, this kind of markets as well. We have not been in the domestic market so much, but this is one of the instances that happen in which we are now exposing ourselves to the domestic market in India as well. So that number also will go up in future.
So right now it's around 25 to 27%. So I can expect 35 to 40% in next 12 to 18 months, Pallab?
So of the total turnover of or the sales of Pearl Global, around 25-27% is coming from India. And there also we had zero exposure in the domestic market earlier. So that is one thing that is, I think this is one of the tipping point when US pressure came in. So that has started also happening. We are supplying to the domestic brands as I speak. And overall, the growth that you will see for Pearl Global will be across all these regions. So
Yes.
countries like
Pallab,
Vietnam.
yes, sir, we are a little bit of short on time. Just need your fast answer to it. There's a concern regarding the concentration risk in the revenue terms for even large clients. How will you address that?
So I think we are in a very good position out there. If you see today, our top 5 or top 6 customers is close to about 40 to 50% of our sales. Now that is, if you look at it from one side, it looks like a risk. But we are not only there, they are not only our top customers, but we are also their top suppliers. So we have a very strategic relationship with those, and that's where like we come in with a plan of 2 to 3 years in advance with this kind of customers. So that's the stickiness, or that's the kind of very strategic, strong relationship that we have been able to build up. And
Thank
this
you.
number,
Yeah, Pallab, thank you very much for your time on that. And that was a concern which a lot of investors had asked me to pose these questions to you. Thank you very much, Pallab, for joining in, and best of luck for the future. But to wrap it up, there were some important key considerations for this discussion in KYC. And the first and foremost, the management has stated that overall, the repercussions are still there in their US business due to the tariff. So that's the major overhang, and it still remains until and unless India-US tariff agreement, we don't get much clarity, because 50% tariffs is something it's still hurting the company. And now the second important thing which the management has stated is, of course, there's a divergence happening in newer markets they are going in. but there is a big scope of growth. India is not playing major role in garment supplier sector. There is a huge potential there, and the high margin products demands have started coming in. Green shoots are coming in Asian markets such as synthetics, which are basically your wears in the wind cheaters and sports jackets as well, to simplify it. But this is the entire picture of Pearl Global, where the company is putting up a brave face in the adversity and hopefully a turnaround video there, and that's why DIs are also supporting the counter. That's all for today. Thank you very much for watching KYC and NDTV Profit.